and I have designed my own grand unified inflation-deflation theory that I will share with you now.
Oh, do tell us, Max Keiser. What is your grand inflation deflation theory?
The unified theory.
The unified theory. Go ahead and tell us.
Well, okay, so the Citigroup is a good example of exactly what it is I'm talking about here. So, when it suits the folks on Wall Street to have a deflationary episode, like we saw at the end of 2008, they can open the window to this off-balance sheet, multi-hundred billion trillion dollar debt and scare Congress into forking over more funds, which they did in 2008. Then, when the money is forked over, they shut that window, and they say, "Don't look at that. Don't look behind the curtain anymore. There's nothing there." And they take the money from Congress, and they engineer. Then prices stabilize because the panic that they created subsides, and they claim that they did something positive and that they are worth multi-hundred billion dollar bonuses that we're seeing paid right now, which will be given to these guys now and at the end of the year. And they're using the bonuses right now to jack up real estate prices in London by buying indiscriminately properties based on money that they basically stole, that they used using a bank holdup technique that we saw Paulson and those guys do in Congress at the end of 2008. So now they're cashing in the money that they stole. And because when they showed the black hole of debt through the window into their off-balance sheet world, Congress, Congress and the Federal Reserve Bank was able to flick the switch and inject, according to the last count, 23 trillion in fresh credit. Remember, the U.S. economy is only worth maybe 12 or 13 trillion. So 2 times the entire GDP of America, they injected in fresh credit in the course of 1 year. So you have an economy that exists between two worlds. One is an off-balance sheet world of infinite debt, and one is an unregulated, off-the-books, non-accountable, non-elected, non-entity that's not part of the official government, the Federal Reserve, that has, let's call it $20 trillion worth of credit expansion at the flick of a switch. So at any given moment, either to the left, the Fed can flick the switch and inject 20 trillion in credit, or the banks can open the window into the black hole of their perpetual infinite debt and show $20 trillion in debt to horrify people. So and we know that the derivative market, which is the market where you trade the unregulated black hole of debt, is roughly 600 to 700 trillion in a world that's only worth maybe 50 or 60 trillion on a GDP basis for the globe. So clearly the black exchanges and the unregulated derivative world is at least 10 times bigger than what the visible world is. This is really basically financial antimatter that we're talking about, which is ruling the visible financial world. So now that basically we're at the end of 2009, and the scare that resulted from opening the window to the financial antimatter of debt created the Fed to inject $23 trillion in fresh funds is being paid out to these people in bonuses, and it never made it to the real economy. It just stayed in the financial economy, and it just turned into bonuses. Now it's time to set up the economy to repeat the same thing over again. So Citigroup will disclose in the next few weeks, they're going to open that black hole of debt window again to Congress, to scare Congress into forcing the Fed to release another 20 trillion in fresh credit, which will set up these banks for their 2010 bonus, which will be paid out in 2011. So here you have an economy. So in other words, it's not inflation or deflation. Those terms would assume a certain coherence to the economy and that the economy obeys some kind of historical precedent in its management. But we don't have that anymore. What we have is a new period of derivatives and algorithmic trading and program trading and financial antimatter controlled by quarks and quants and rogue financial engineers and scientists on Wall Street who, given their their interest, and it's only in their interest. It's only the top 500 bankers on Wall Street and a few guys in the City of London. It's only in their interest that they can show either to the one side of the economy 20 trillion in fresh credit, which would cause an inflationary bump in asset price bump, as we've seen in the real estate market, to assist them in their 5 million and above pound purchases of real estate, or when they need to scare up some more fresh cash, they open up the other side, which is the infinite black hole of debt side. So now that the pattern's been established, we can safely say that Citigroup within the next 3 months will threaten to declare bankruptcy, and that they will do what Merrill Lynch did. Merrill Lynch, we know, they did not disclose hundreds of billions of dollars worth of debt, and they forced a shotgun wedding with Bank of America, and in so doing, totally benefited those insiders who made out like bandits, because they are bandits, and they removed competition from the system. They removed the integrity of the system. They removed financial and economic pillars that were making this economy work, and they have engineered a greater direction toward financial oligarchy, which we now all suffer from. And now this will happen again. So I'll throw it back to you in a second here. But in other words, the financial oligarchy is getting stronger. The inflation deflation debate is a canard. That's not really what we're talking about anymore, as per what I just described. And 3, based on the repeating patterns of the criminals that are operating this rogue scientific algorithmic slave state of non-accountability and financial antimatter, I predict that within 3 to 6 months, probably closer to 3 months, Citigroup will threaten bankruptcy again.